Hello again, everybody. Dwayne here from DRFX Forex and Trading. Going to be taking a quick brief overview of the situation on the US franc, which has basically played out in terms of the projection for this pair over the last several weeks. Here we can see the market rallied to create this trend line when it rallied above this previous high. In creating this trend line, the market then U-turned at the resistance boundary to effectively create a pair of double tops, which are pretty strong signals that you see across the currency market. And then this was followed by a break of the trend line that led to the current downtrend that we're now seeing that could actually take us back to the support boundary. Now, this movement was exactly as I had predicted over the last couple of weeks. As you can see from this screenshot of the previous video analysis, the market was projected to rally instead of responding to this bearish candle, take us back to the resistance point and take out this previous high to form the trend line, and then U-turn at the resistance boundary to create a double top formation, which would then lead to the break of the trend line and carry us back to support. So this is exactly what we're now seeing taking place on this pair as projected. Now, the reason for this projection had to do with the fact that despite the strength of this bearish signal, the candles that led to that signal, or what we call the setup that led to the signal, was pretty weak. Normally, when we have a situation in which the market provides a strong signal but the setup is weak, the market has a very low chance, a low probability of actually continuing the movement in the direction of that signal. This is in contrast to this previous signal here, which, as you can see, is actually a typical A, B, C signal, which is a very strong signal that generally leads to sharp movements. So this, even though we did not necessarily expect the market to provide another ABC signal, you normally expect a strong signal such as a double top formation, or probably even a consolidation, a small consolidation setup, followed by a breakout to be formed at this area here. So normally when it comes to movements within consolidation, the market has to provide us with a strong signal at the boundary of resistance or support that is strong enough to justify the movement and a trade to take us to the other side. If it is too weak, then the market is likely to U-turn and probably move sideways or reverse, as was projected here, before providing us with a strong signal to trade. So as you can see here from the sample of the strongest candlestick formations that you would see across the currency market, the double top formation was the projected signal that would have been most appropriate for that U-turn at resistance. Here you can see an example of an ABC signal which we had seen that led to the previous sharp decline previously. So these are the types of signals that you would normally expect when it comes to trading in general, and they're even more likely, or the ones that you should expect when it comes to trading within the boundaries of support and resistance, especially large setups such as these. So as you can see here, this is exactly what played out. The market rallied, took up this initial high, created this trend line, and then U-turned and formed double top formation, which then led to the break of the trend line and the movement to support. So right now, we're in a situation in which the market has started to pull back and has created this candlestick, this bullish candlestick formation. From here, the market is either gonna rally and head back to support, head back to the resistance boundary, but the more likely scenario is that we actually see the market break this counter trend line and provide us with another bearish signal to then take us ultimately towards the support boundary. So that is the expected movement that I see for this pair over the next couple of days, heading towards the end of the week. So we could actually see the market head back to support and then either rally once more to take us back to the resistance area, or actually finally break out of this pennant and provide us with a strong breakout below the support boundary in favor of the Swiss franc, providing us with several trading opportunities to provide at least 200 pips in profit. So these are the possibilities that we can see, that we can expect from this pair over the next couple of days. A break of this counter trend line that takes us to the support boundary, and a rally that takes us back to the resistance boundary, or a movement or a temporary movement sideways that leads to a break of the support boundary and a sharp breakout in favor of the Swiss franc. So we're gonna have to wait to see what takes place at this area here, and then once it reaches this area, we're gonna then make a similar projection in terms of the candlestick formations that we're likely to see based on the candlestick signals that the market provides when it reaches this area. So the key to these types of setups is knowing when the market is likely to rally and take out a signal despite the strength of that signal. And the rationale behind that is that the setup that leads to the signal has to be strong. Otherwise, the signal is not going to work out and we're going to incur losses. So that is the key with respect to anticipating candlestick signals, especially within the boundaries of support and resistance. So let's wait to see what takes place here and take action from there. Happy trading.